This oil price spike has all the trappings of the kind that can cause a recession. It's been really sharp and very sudden. But economists so far, who I'm talking a lot to, they're reluctant to put negative numbers in front of those U.S. growth forecasts and call for a recession. The reason, I hate to say this, it may be different this time. For one, this is the first oil price spike since the U.S. oil deficit has evaporated, and energy imports and exports are roughly balanced. So instead of sending those big checks overseas with the price spike that reduces growth from bigger trade deficits, the bulk of the extra money will stay in the U.S. Michael Gapin, chief U.S. economist with Barclays, tells me an oil shock will have negative effects on consumption, but they are less pronounced than they would have been in past decades when we consume more gas, and we should get a greater offset from oil producers reinvesting profits in the U.S. economy. Gapin points out that the share of household spending on gasoline, it's nearly halved since the 60s. So Americans are going to get angry about the prices at the pump, but ultimately they're not going to be as hard hit as their parents or grandparents were. The speed of the hike, it's definitely worrisome. It's the kind of spike that could cause a lot of what they call sudden economic dislocation and, of course, some pain. But the big way these spikes hurt is in durable goods. And the U.S. is so far down in auto sales because of the pandemic and the supply shocks that sales are going to rise almost whatever happens with oil. So there's a massive hurdle for the economy from higher oil prices and the commodity prices you're talking about. But the economics of the price surge, they're different this time, and the negative effects, they could be different as well. Joe?
All right, Steve, yeah, we have seen this movie before, and I don't know, why we're surprised. Do you? That maybe you're going to see some type of a slowdown? I mean, it really, I've seen numbers that are staggering about how much more this could cost people a year. $2,000 a year more for gas?
No, it is correct. And you can't minimize the pain to low-income and moderate-income households, for sure. But the overall economics and the accounting of the money is going to be very different. If you look at that chart, Joe, that shows we have no oil deficit, we have no energy deficit right now, it just means we're not sending these we are going to send the checks to Saudi Arabia. They're going to be collecting big checks. But it's what happens, Joe, to our oil companies and whether they reinvest that will determine how much we get back of that.